Continuing our earnings prep, let's look at some options trades on a few of the big names and themes. Mr. Ducat, looking at some of the flows and where there's been heavy trading activity. Let's go for the financials as a sector first. XLF, Rick, in the first half of the week, what showed up on options? I know you've been digging through here trying to find something interesting.
Yeah, so it can be interesting to look at these sectors when there's a lot of companies concentrated in the same area. Next week we've got Wednesday, JP Morgan, Wells Fargo, BlackRock, Citi, Bank of New York Mellon. Thursday, Bank of America, Morgan Stanley, PNC Financial, U.S. Bank Corp. Friday, Truist Financial, Huntington Bank Corp, Regions Financial. So that's kind of a more regional bank day here. So a lot going on in this sector, and it's an important one here. So, and when we look at a day like today, the market's closed. You know, there's only so much we can do here. But I did look at the options data from yesterday. I found some really interesting stuff, just starting here with XLF. So some of our key points that we have on our charts here have been highlighted. These are kind of the strike prices that had a lot of activity. 40, 48, 49, and 50. So when we look back here, total options volume yesterday was about 185,000 contracts. 37,500 of them came in the February 21st 48 strike puts. So this red line right here, we don't know if they were what the trade specifically was.
Sure.
This is just high volume areas here. The expected move for this option series is about $2.67 here. So this strike price is well within the range here. So this would be more of a trade that could be in play here. And the bid ask was 69 cents to 102. So you could have gotten 70 cents for selling those puts here. That would be pretty close here. I'm thinking maybe that seems more like they were buying, looking for a drop off here, because most of the activity in this name was on the put side, unlike our other two names we're going to talk about here. The other big trade, January 17th, 40 strike puts all the way down here. And this was an interesting one too. The expected move is only $1.32. So I mean, we're not even close. Like that would be a huge 17% drop to get down to that point. But you get hardly anything for them. They probably got like a penny for selling these, if that's indeed what they were doing. But those were the big levels. And then the 49 and 50 strike calls saw heavy activity. The 50 calls in January 31st, the 49 calls in January 17th. But each of those were only about 10,000 contracts.
So this one's highly speculative down here, of course. This one, though, at the 48 strike that they were selling roughly?
Well, we don't know if they were.
We don't know if they were selling or buying. Yeah.
My thought would be that they were looking for a bearish play and perhaps were buying those 48 strike puts.
If they were selling them, it would be a higher risk, but higher, potential income way to sell premium too. But usually people don't do that like right at the money, which is pretty much where we're at.
We would have high option premiums because it's an event risk situation here. So if you were doing that, might make sense.
It'd be a very aggressive way to trade premium and to collect premium like that. So, all right, so possibly some downside speculation generally, because that's kind of, you don't really see people selling stuff right at the money. But the chart is not the best either. It's definitely gotten coiled up after a pretty big breakdown. I mean, this one big candle basically ended up being the biggest one for like 2 weeks, almost like engulfing the next 2 to 3 weeks of action. So I can kind of see where some of maybe a bearish interest is coming from, but that's pretty good support at $48 too.
Yeah, but notably, we went back to the old highs and we didn't fill the gap. Maybe it wasn't as bad as it seemed at first. It might have been painful if you were, holding on to longs that you bought at the highs, but all in all, it could have been worse.
Yeah, fair enough. Let's look at Bank of America, another one that's always important because it does have a lot of that bond market exposure, lending exposure. What are they trading here? What stood out? Because this one's got quite a range in the last couple months.
Yeah, so this is an actively traded option. This is maybe number 2 of our big banks in terms of market cap. JP Morgan, $684 billion. Bank of America, $353 billion. So certainly not a small company by any means here. And, a bit more complicated here because there was more notable strikes at smaller increments, I would say. So January 17th, obviously, that's the big, week for everything. That's when earnings happen. So that was the most activity. And the ones that were trading during that option expiration series were the 49 calls, so this one, the 47.5 calls, which were this one, and the 46 calls, which were pretty close to where we closed during the previous session here. 13K for the 49 calls, 10K for 47.5, 6.7K for the 46 calls. So pretty heavy trading here. Total volume was about 155,000. So keep that in mind that these are big numbers. This was a big activity. And a lot of these levels, you'll notice these horizontal lines, they line up with key things like, for example, a volume node and the linear regression line here. 49 is pretty close to our +1 standard deviation channel. 44, which we'll get to in a minute, is close to the 63-day EMA. I'm not saying that's why they chose these things. I'm just saying that these are levels that I would have called attention to just looking at the chart anyway. Okay. So these may be reasonable points to consider trade examples here. So we can see as well January 10th, the expiring tomorrow, the 47 calls and the 46 puts were the most actively traded ones. So we can see here 47 and 46, those are kind of the near points there as well. Not really very expensive. Those 47 calls, if you were buying them you have to pay about 8 cents. That would be a more low probability trade though. Those 47 calls will be just outside the expected move of 70 cents. So even if it's close by, it's still not as probable as it could be.
Sure, but if it does get there, then you get a nice little return on your investment, obviously. So yeah. Maybe a little speculative trade possibly to the upside, unless you're, if you sell them, then you're kind of not getting a ton, but a higher probability way to sell. I guess so. The market doesn't have big volatility expectations for Bank of America.
Yeah, and that's what I was going to mention next. Is that this is a lower volatility name. The volatility would be higher in, like, for example, some of the regional bank names. But all the way down here, even at $40, which lines up with the purple 252-day exponential moving average and is very close to our point of control here. All the way down there, people sold about 6.4 thousand of the 40 strike puts for the August 15th series. That would be the expected move 828. That would take us all the way down to 37.93. So it may seem very far off, but that trade is still pretty reasonably within what could happen based on the math for how we calculate this stuff here. So maybe not as improbable as you might think.
Wow. Well, there's also a lot of volume down there too.
Yeah, and they got it closed at, you would have gotten $1.04 for selling those puts at the close of the previous session.
Wow, that's not bad.
Yeah, I mean,
interesting. So there's some kind of downside skew, I guess, in some of the options?
There could be. I mean, it was wider bid-ask spreads. This was not as heavily traded of a contract, so perhaps it's hard for me to know what price the trade actually took place at, though. This is just kind of what we can see right now.
Right. Hey, real quick, last one. PNC, not one that usually cracks like the top 5 for banks in terms of our conversation, but they've been growing, and they're kind of in between regional and big now, so a fun one to watch.
So this is the smallest one for sure, a regional bank, one of the bigger regional banks here. This one is a different situation. This one had about 6,000 contracts trade yesterday, but guess what? 5,000 of them were the March 21st 210 strike calls. So about 83% of the total volume was at this level. It was probably one trade, I would assume here. I can't say that for sure without looking through the data. But so this one, you would have gotten 250 if you were selling, 480 if you were buying at that level. So a wide bid-ask spread. Expected move 1830 over 71 days. So about a 9.4% move we're looking for, which would only be up to 213. So the expected move would not be at the highs there, but that could be it. And I'm really curious what that would be if they were looking for a push into new highs, or if maybe that's a ceiling and they're selling those calls. It's hard to know. It depends on your outlook. I'm not saying you should do either one, but this is a level that someone had their eye on.
Boy, well, the chart's kind of fallen below its moving averages in a pretty negative way, I feel. So it's a pretty tough one. There's a lot of volatility baked into this name. Maybe that's kind of the regional component of it more potential for upside or downside, just surprise in general when you're kind of getting more towards the kind of levered towards the rate stuff.
Yeah, for sure. It's a different beast. You know, they're similar. If you were to look at the chart of like XLF versus KRE, they would be similar. KRE would be significantly worse, though. It would be a similar shape, but it's more extreme.
Definitely. All right, well, PNC, maybe one of the more volatile names. Nice prep.
Yep.
Good eyes. Thanks, Rick. Looking at the options ahead of the bank earnings. PNC, maybe one of the volatile ones. All right, should be a fun earnings period to test the financial strength.